The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Wow! Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 228. NASDAQ is up 92. S&Ps are up 37. Gold contract trading down 950 at 1,315 an ounce. Silver up 6 cents at $17.81 an ounce. Platinum down $1.70 at $9.77 an ounce. Copper up 5 pennies at $2.17 a pound. Light sweet crude up $1.50, trading out at $47.83 a barrel. Bonds, pretty amazing. Ever-ready bond market, folks. 10-year down 1 tick, 133.17. 30-year off 4 ticks, 173. Flat. Bottom line, they both want higher price. It went up the last 2 days with volume. Pulls back, lighter volume, higher prices coming at us, lower yields. King dollar is down 423 ticks, trading at 96.28. The euro is at $1.10, and the yen is at 102.77. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So we go over to the SPY. Your SPY, you're up 320, you're bouncing on 113 million shares. And what I expect you're going to get out here, we're at 202.80. This thing can bounce up to 205, even into 207.75. The 205 level, folks, is the low from the 16th of June. The 207.75 are the lows from the 20th as well as the 21st. This is building a B to a C of an ABC structure on the way down. You get down with monster volume. We get down with Friday with 333 million. Yesterday, you get down with 248. You're bouncing on light volume. You get the setup happening. That setup, by the way, is happening right across the world. NDX 100, 3 Qs. Same type of setup in the NDX. You come off the highs. We come off them with 68 million, 50 million yesterday. You're going up with 20 million. The 3 Qs, we're at 104.29. 106.24 is gain inside the 3 Qs. Bonds, what do we have at the bond market? You know, my voice wasn't this bad a few minutes ago. It didn't seem it. I guess I wasn't talking, so. I feel a lot better than my voice sounds, folks, that's for sure. So, let's go take a look at the 10-year. The 10-year, you're sideways movement out here today. You have million shares traded, million contracts rather. Bottom line, 10-year and the 30 both want higher price. Pretty amazing. And that's right across the world, too, by the way. 30-year out here, hanging at the highs. The highs that we're hanging at 173.03. And the way the 30-year is trading, folks, it looks like it wants to go into the 180s, which is just pretty amazing. King dollar. What do we have a king dollar? Let's take a look at king dollar. We have a king dollar is this. King dollar right now. King dollar's trading out at 96.28. You've done 19,000 contracts, and this is where it's going to get a little tricky here in the metal market. King dollar, folks, looks to me like it's going to make this run for 98.50. So, you know, we had a spike high last Friday and had the juice behind the move. You went from 93.73 up to 96.70. You did the volume behind the move. Yesterday we go sideways. Today we go sideways. What we're actually doing out here today, though, is you're rejecting the lower price from yesterday, and you have lighter volume than yesterday and the prior day. So that's almost saying, you know, these two levels, and the levels that we're talking about, what I'm talking about here specifically, the downdraft that was created on the 3rd of February. That downdraft started at 98, 91, and went down to 97.31. That same correlation, it tried to get higher on March 10th, and it couldn't handle it again. It looks to me like it's going to make that run for that 98.50. We get that, and I suspect if that's the case, you know, gold, XAU, HUI are in ABC structures on the way up. But it doesn't mean that you can't pull back a bit. You know, the GLD, you know, right, we're trading out here at 125. Well, you know, the GLD is going to have gaps all over the place, but let me go back to the contract for a second. You go into the contract, you know, this contract can pull back into 1297 pretty easy. And that wouldn't be a thing, but that's the way it's looking at this particular point. Our phone number is 877-927-6648. Let's take a look at some of the higher volume stocks in this low volume market, because that's what we're going to have out here today. You get low volume across all the indices. Sorry about this, folks. I'm trying to. Okay, some of the higher volume stocks out here today. You get Freeport McMoran up 56 cents. Micron Tech's up 77. You get Citigroup up $2. If we go over, let's go to Citigroup and go to the financials. They're doing an ABC. They're doing a B to C of an ABC structure also on the way down. Citigroup, you're up $2. 27 million shares. That's after blowing downtown with 71 million. These are nice little setups. And more than likely, what we're going to see is that the next leg inside the financials will get us down to the high volume swing low that was generated out here in February. The A point is going to be 44.50 in Citigroup. 38.31's the B, so you get $4. If we get into the 42 area, that's going to give you a 38, and that's still not going to get you down there. 36 to 34 is the lows that were generated down there in February. I suspect that's where we're going, though. Some of the Dow stocks we have, let's go to the XLE. Take a look at the XLE. XLE right now is up $1.76. You're at 66.60, also in light volume. ABC structures on the way down look like they're setting up everywhere, folks. You stay right there. We're going to come right back. Dow Industrial's up 242. NASDAQ up 97. S&P's up 39. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we get the Dow up 231, NASDAQ up 94, S&P's up 38. And as we do each and every Tuesday at 20 past the first hour, we have our man, Mr. Basil Chapman. Don't forget, folks, Basil does a great show right here at TFNN every trading day, 11 to 12 Eastern Standard Time. You can get it right on your cell phone. Go to TFNN.com, hit Tiger TV. You're going to get HD audio as well as video. Basil also got a great newsletter, The Opening Call. Now, you can test drive that 30 days, absolutely free. The way you do it, you go to TFNN, you go to newsletters, you go to trading newsletters. You can test drive The Opening Call 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. You managing to scrape through there, but you got energy, but the voice is a little scratchy.
Oh, man, it's weird. I know. Seriously. And, you know, it's weird.
It's funny with those summer colds. Sometimes you actually can feel not too bad at all, but it sounds.
Oh yeah, no,
weird.
Yeah, it's pretty strange. It's strange to myself too. Believe me.
You're always looking around to see who's speaking, right?
Oh man, I'm telling you. So what are we going to look at today,
I'm
Basil?
showing you the chart, and I'd spoken about this the other day when we were talking. It was Thursday, and the Dow closed right at the high. And I said that I was kind of nervous about the way it closed and what happens if there was news, because on a purely technical basis, if there wasn't any news at all, we would be looking at something that said the Dow should go a little higher and probably take out at least the left side low of the 20th of April. And in fact, of course, it's as if we were driving along, the light was green, and out of this red light came this Mack truck. So what happened is with this very sharp decline that started on Friday going into Monday, I had shown subscribers the match, and I'd spoken to you about the series of highs that were made. Now I'm going to show you what I showed my subscribers over the weekend and this morning. And it's this chart right here. And you see these arrows. And this is the Dow daily chart, if anyone's listening and not able to look at it. I'm merely showing the Dow chart, the price movement on a daily basis. That goes back a little bit before the May high of 2015. It was May the 19th at 18,351. And this thick red line is a 20-period moving average. And what I showed was that there was a move that essentially set up 2 parallel lines. So it was in a channel, and then suddenly it broke down and broke through that channel and started that big sharp move down in August. Yes. Well, we had the same thing happen over here in November when you ran back up to highs, not all-time highs, but recovery highs in November, and that's the red line. We made a channel around that, a declining channel around that red line, and then suddenly there was a smash to the downside. All of a sudden, we've got the same pattern. And this pattern said to me, and this is what I was explaining to subscribers, that because of this pattern, we've got to be a little bit careful because there's a match with the other declines. And that there's a chance that today I had three particular Chapman wave techniques that I was using to say there should be a rally intraday as there was yesterday, which was about 20 points, so that it was hardly noticeable. Then the market went back down to test the lows. Today, that same indicator flashed to warn that there'd be an upside surprise, and in fact, we've held very well. So the very interesting thing here, I'm going to move this chart away, is that the pattern that we're looking at right now, let me expand a little bit so that we can see it, says that this rally, I've got what I call a gray A here because we made a nominal new high just above yesterday's high. It's really important over the coming few days because if there's a break below yesterday's low of 17,063 in the Dow, that's very negative, and we should have a really quick move down to the 16,821 level, which is key support. It goes all the way back to March of this year. But if there's a rally, the rally could continue higher, and this is, for me now, this is the very big thing that I have to make a decision about. Within the context of the market having had such a nice, strong move last week into Thursday's close, is this an aberration that just, as I say, a Mack truck just came and smacked you, now you're trying to find your way, and the market is going to go back to where it was? So I've got parameters that I think are very clear. If I look at the charts, certainly the weekly charts of many of the key stocks, the damage that was done over the last couple of days is really it doesn't look like it's going to be repaired very easily. So we're a little light now in terms of the portfolio for my opening call for the Traders Corner. We do have some longs, and we have a particular short that's still not even participating in today's rally. And I think this is selectivity that we've got to be a bit careful here. There is a chance that this rally can go a bit further. 17,660 is this 20-period exponential moving average, which is like 300 points up from here. I just don't know if we've got that kind of strength. I think that the news still is negative. So it's one of the few times where I'm kind of on the sidelines. I almost went long. I would have loved to have gone long intraday yesterday because the risk reward was much better. Now I think it's a bit risky. I think it's even worth waiting because if the market is going to move higher, we will have plenty of long positions to put on. If the market is going to go down, we've got plenty of shorts to put on. So I don't see any rush. And if I'm looking at that weekly chart, the damage that was done on this bar here is going to, this week on Friday, is going to be very important because not only do we get a month's end close Thursday for June, but it means that the weekly chart, I'll be able to get a better picture of it. But in the meantime, what I can see is that the MACD is turned down, the stochastic is weak. I've got weak technicals. So I'm not in a rush to go overly long. I'm also not in a rush just yet to go overly short. I want this just to play out. But I think my parameters are very clear. A close in the Dow above 17,600 says, hey, this is going to try to test the recent highs. And if we break below 17,000, let's call it 17,000 to be safe, I think we're going to be going down. And if we go down, it could be a situation where we start to use time. I don't know how much more price there is on the downside just yet, but maybe we use up time. We've already used up quite a bit of time in the high that was made back in April, and we haven't made a new recovery high, but essentially we haven't really broken down. And if you look at this monthly chart, it's just saying, ho-hum, just a little correction, nothing much to see here. But that makes the close on Thursday very important because on a purely technical basis, the Dow monthly chart is still on a buy signal, and the weekly chart has not gone to a sell mode yet. So I have mixed in different time frames. The daily is in a sell mode. The weekly is just kind of touching a sell signal, but hasn't really given a signal yet. and the monthly chart is still very bullish. So I have to just remain on the sidelines, picking certain stocks. We added something today which seems to be doing quite nicely, and it's very interesting. We've got a short position on Edwards Life Sciences. I'd spoken to you a little while back, and it was one of the most fantastic stocks in the New York Stock Exchange. It went from the 32 level up to 110, and the 110 was reached in April. And that was a leg F in my work in the Chapman methodology, Chapman wave, and a peak F 112 round number high in the weekly chart. So we went short back at a couple of times, but the last one is at 99.01, and it's now at 94. And today it just hasn't been able to move at all. So I think it's very selective. You can be short, you can be long. Very interesting market we've got here.
Folks, don't forget, every trading day, 11 to 12 Eastern Standard Time, you can come over to our website, Test Driver's newsletter. It's the opening call, right under newsletters, trading newsletters. Basil, thanks so much. Look forward to the show tomorrow.
Get better, Tom. Speak to you soon.
Will do. Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look inside the indices and see what's moving these indices. First, we'll take a look at the Dow Industrials. Dow Industrials right now trading up 213. The strength is Travelers Insurance is up 3%. JP Morgan's up 3%. Visa's up 2.3%. And Nike is up 2%. If we go over to JP Morgan, we take a look at it because JP Morgan was the leader on the way down yesterday. What you're going to see is that this also looks to be setting up an ABC structure on the way down. What you have is this. You came off the high of $64. You got down to 57. You came down with 14 million. You're going up with 5. Nice number. Pretty amazing, actually. But that's just how markets like to move. The laggard inside the Dow today is DuPont. DuPont's down 3%. Walmart's off 0.2, and Verizon is off 0.1. If we go over to DuPont, we take a look at DuPont. DuPont lower. That looks like it's going to be going after its 58.90 area, I believe. With DuPont's doing a merger, and they laid off a bunch of people. That's what happened out there today. If we go into the NDX 100, we take a look at the NDX 100. NDX 100, the leader out here is Endo, and this stock's the biggest dog in the world. And this is what's really cool, folks, when you can look to see where these bounces come in. So Endo is international is up 18.7%. Well, guess what? This equity has gone straight down from $94 and it's trading at $16. Bottom line, you get a dead cat bounce in it. And the amazing part is that it's each and every day, what does happen is that this is always in the NDX 100, whether it's bringing it up or bringing it down. Bringing it down, it's pretty strong in the NDX 100 today. Illumina is down 0.7%. You get Dollar Tree off 0.6, and you get Monster.com off 0.3. Yeah, so no big destruction there. Let's go over and we take a look at the XLF itself. So the XLF right now, you get a bounce going with light volume, 74 million shares. You're at 21.93, and I expect that we're going to see this XLF get up to like the 22.38 number. It can actually get as high as 22.73 on this bounce. And more than likely, what we're going to see, folks, is that as this bounce materializes, you got window dressing that starts Thursday. You have maybe Wednesday, the first. Yeah, you get window dressing that starts tomorrow. So window dressing starts tomorrow. You have the first, which is the July 4th holiday. Bottom line, you're going to bounce. I expect we're going to bounce right into this holiday. What is that going to set up? The Monday, of course, is going to be, that's July 4th. Tuesday, Wednesday, that's going to be slow next week. So we'll see what the next week's going to be the downdraft. If that isn't the case and you go sideways, it's going to be the following week that you'll start digging into lower prices out here inside the marketplaces. If we go over and take a look at, excuse me, folks, over Europe today, what you're going to see is the FTSE was up 2.6%. The DAX was up 1.9. The CAT was up 2.6. If we go to the FTSE first and we take a look at the FTSE, I think in the next hour I'll have the volume. I suspect what we had is that the FTSE more than likely also went up on light volume today. The FTSE had come down on 3.9 billion. Then it tested that yesterday at 2.5 billion. What I expect you're going to see out here is that as that little baby gets higher, the volume is going to contract. And this is where it gets really cool inside the aspect that when you look at the full markets across the world, more than likely what we're going to see is that you're going to see those ABC structures lining up on the way down. One of them to keep your eye on is going to be Google. Why Google? Because what Google had done, folks, is this. Google has the high volume swing low from February. That number is $663. So Google went from $663, did a nice counter trend bounce to $769. Huge, right? No doubt. $106. Comes all the way back down and gets into 666 again. 663 rather. And now it's bouncing on light volume. It looks to me like Google is building cars in another smaller ABC structure down, but that will blow that away from the February 8th low. And in fact, if that's what you get, then you want to be prepared that inside that S&P, that more than likely you could come down into those lower levels, you stop before those lower levels, and then it'll take them out. How we come down to the lower levels is going to be crucial. whether that's just going to be a test and you bounce off that, or in fact you start building cause. And what cause would be, folks, the bull and bear out of it is you get down almost to the end of it, you start trading sideways for a bit, week, 2 weeks, and then see you. Don't want to be you. We get into the small caps out here. Small caps also doing a nice ABC, a B2C of an ABC structure on the way down. We're bouncing out here with 33 million shares versus the going top side with 74 million and all of the above. Oil also is doing the same type of setup there. It's just pretty wild, man. I mean, the things, excuse me, folks, the things, the ABC structures are pretty much all over the place. And you got to remember something, that what does happen with an ABC structure on the way down, you have volume on the way down, lighter volume on the way back up, you get the turn in the market again, it's going after the B point, you take that B point out and you take it out with volume, get out of the way. Because this one here, if we take a look at the S&P, this is a decent A to B. Your A point on this is the high that was of last Thursday, which is 2113. Your B is the low of yesterday, which is 1991. So you're talking 122 points. That's a big number. Now, the real catch is going to be, where does that number come off from? Where is the C point going to line up? So one of the C points, can line up right at that 2050, which is 20 points higher. Real deviance would get it up to probably the 2075 level. But right in between there, I suspect that's where that's going to line up. Now, either way, 122 off the 75 is still big numbers. You're still talking, that's 2075. Yeah, you're still talking 1953. And we got down to 1991 before. 1953, yeah, see, this is setting up pretty good. 1953 is going to get you kind of at the top of the lows. Not of the lows, but of the consolidation where we had traded in January and February. And if that's what you get, if that's how this thing lines up, then you're going to want to be really careful. The reason being is that when you don't just come down fast and furious and blow those lows out, whether testing them, and then you get right before those lows and go sideways, that's the building cause aspect. You stay right there, folks. We'll come right back. Dow right now is up 219. Nasdaq's up 86. S&P's are up 36. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at the Dow Industrials. Right now, you're up 239. So we're right at the highs, actually. 380. Yeah, 387 has been the high. We'll go take a look at the E-minis and see how this shakes out. E-minis right now also are at their highs. 2025 has been the high. We're at 2023.75 out here. And let's see. So you get 2 minutes into it. You get the spike up there. So this is going to get interesting. So what the E-minis are doing right now, folks, they're testing the bar from 10 minutes or 2. The top of that bar is 24.75. I suspect what you're going to see here, this market wants to stay higher, but just in the last closing in, more than likely you're going to get down somewhere about the 2020 to 2018. I suspect it's going to fail up here because with 3 minutes into it, man, so you'd have to come in with some big, heavy volume pretty quickly. But that can happen. One trade can do it within a 10-minute bar. If we go over to the NQs, NQU6. Same type of setup as inside the NQs. But the difference actually is, this is kind of interesting, actually. It is. So in the NQs, you actually went at this last 10-minute buy, actually had some strength up to 2074. That was some decent strength. The real question is going to be is that how does it test the 2079 area? 2079 it looks like it wants to get tested. And the Qs, 42.62 looks like that's where we could close out at, which is that's another 10 points down from where we are. That'd still be a strong showing. Well, it's a strong showing on price topside. And bounces, you can expect a bounce. That's what it really comes down to. The XAU, the HUI, XAU out here hanging at the highs. We're at 93.35 inside the XAU. These are complex, well, they're not complex ABC structures. They were complex. Then they took out the B point, did it with volume. And it looks to me, though, the way that the dollar wants to get to higher price, that what I expect you're going to see is you're going to see, as this market tries to move up a little bit higher, which I expect it will the next couple of days, more than likely we'll see the dollar probably make a run for that higher price. What has been really unusual, there's no two ways about it, is the dollar and gold have been going the same way, meaning when gold goes up, dollar's going up. When gold's going down, dollar's going down. That, my take is that that's going to change, folks, because the correlation is that gold is priced in dollars, traded in dollars, all of the above. Yeah, you can put gold in any type of currency you want, but the reality is that it trades in with dollars. Good old, value-wise, that's where it's at. We go take a look at the, let's see, where we're going to go here. I want to go, I know where we're going to go. Good old Apple. Apple couldn't get anything going, still can't get anything going. And so you're up $1.50. And what you have out here in Apple is this. She's been consolidating for quite a while. She's down off $112. You're at 93. Came down on volume, bounced with lighter volume, and Apple's got a monster problem. The reason being is this. Apple didn't make it to its May 12th low. That's a high volume swing low at $89. The volume there was 76 million. Well, the first day we came down with 75 million. Then we got to a lower low, and we never, and the volume died, 46 million, but guess what? You're too far away from that high volume swing low. So now what it looks like Apple's doing is it's bouncing, it's on lighter volume. I do expect you'll see it come up a little bit more. We're at 93, they can get to 96, and we'll see where that turn takes place, and if in fact are you building cars, and that cause, of course, is to run into lower price. Bank of America, let's go to Bank of America. BAC, ABC down. The February swing low still sticking out like a sore thumb. These banks are in tough shape, folks. It's going to be hard making money for these banks when, if we take a look at the interest rate structure, what you're going to see, the Fed funds future rate. Oh, this is pretty cool. I brought up a whole bunch more of them now. So check this out. Oh, this is unbelievable. I'm not sure how I just did this, but I have you changed it. So normally when you bring it up, I bring up 6 months, 5 months. The Fed funds future rate now, the first time it's 0 until December 14th. Then the odds are 8.6% that you'll get a raise. That's for December and February. It goes 13% in March of 2017. 16.7 in May, 21 in June, 22 in July, and 30 next September. So that probability is pretty intense. You're talking about September of 2017. We haven't even got to September of 2016. Long way off. And I'm sorry, folks. What that probability just shows us is that bottom line is that we're going to be in low rates for a long period of time. Right now, our 10-year is trading at 1.4. If we take a look at the 30-year out here, the 30-year is at 2.2. We get over and take a look at the British pound. Now, the British pound, got toasted, roasted, all of the above. Let me pull this up. GBH. British pound traded from, it was at 150. You talk about getting slammed. I mean, this is pretty amazing. Went down to 132. You're still at 133. Bottom line is that, you're going to get a counter trend bounce on this, but it looks like this currency is going to have to do a lot of work in order to get to higher price. What the currency actually had done is that it went down and it tested out the January of 09 level, which is the 135, then broke right through it. So we're below that January 09 level, which is the middle, of course, of the financial debacle. That's about as intense as you can get. And of course, what that's about is they're figuring what is the amount of trade. So your currency, folks, has to do with, of course, the country paying debts back and the amount of trade. It's the amount of trade that gets done inside currencies that make them very powerful. That's why you see commodity currencies. When the commodities are running, the currency starts running. Why? Because people need the currency in order to buy the commodity. So it's about a trade issue. You stay right there, folks. We're coming right back. Dow Industrials right now are up 254. NASDAQ is up 95. S&Ps are up 40. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And if we take a look at the volumes out here, this is what you have thus far. We're at 834 million on the NYSE. That should come in at about $1 billion. So bottom line is that you're down on 2.5 billion, you're down on 1.3, you're up on 1 billion. That's the definition of the beginning of a ABC structure on the way down. The A to B portion, you get out with volume. The B to C, which we may be in right now. The reason I keep saying may is that you don't know whether you're in a confirmed ABC structure until you go up number 1, then you're going to come back and take out the B point. Inside the NASDAQ composite, we're at 1.8, so that's going to be do about 2.2 billion. And bottom line is that we came down on 4.4 billion, as well as 2.6 billion. You're going up on, of course, dramatically lighter volume. If we want to take a look at inside the SPY, you're going to see the same characteristic inside the SPY. And you know, I do expect you're going to get a little follow through here. It's real easy to get a little bounce going once again. They'll do anything and everything to get this baby higher. And you're 203, that can get to 207.75. So good trading. There's no two ways about that. You're inside the NQs. Right now the Qs are at 104. That thing can get up into 107.08. And then what I expect you're going to see is that We're going to make another run once again to go after the B point. And the B point in all these ABC structures, folks, would be the low of yesterday. That's how these markets are set up at this particular point. When I say set up, that's the S&Ps, that's the NASDAQ, that's the sectors within the NASDAQ. That's all the above, okay? So there's quite a few of them that are out there. There's no two ways about that. It's pretty amazing, actually. Tomorrow morning, you're going to have the oil numbers come out. That's going to be a big deal. It's 10:30 in the morning. My son and I do a show at 10 to 11. So you want to check that out. You can check that out on your cell phone. So you get... And then, of course, on Thursday, we get natural gas numbers coming out. And the natural gas, bottom line, is catching a bid in a big way, too. It looks like this is actually an ABC up today. So that's 220 up to 280. That's 60 cents. That's a big one. 320. 320 is coming at us inside the natural gas market. About time we got off the lows. There's no doubt about that. And, of course, don't forget, folks, after my program, of course, on Tuesdays and Thursdays, our man, Mr. Andy Hecht, is going to be coming up growling and prowling with you. So you stay right there. And what will happen is that if you are listening right now, folks, I am going to replay this program for the next hour. I'm sorry, but I don't think I'll have a voice left. Excuse me. It's just getting a little dicey out here. So bottom line is that we play this. Andy's going to be back with you at 5 o'clock, 5 to 6 o'clock. And what you can expect here is that we are building the B2C of an ABC structure, which is on the way down. If we look at the diamonds, what you're going to see inside the diamonds is that the DIA, you're up $2.55. You've done 5 million shares. You're going down. You went down with 11 million. You went down with 7.6 million. These are all over the place. That's the real bottom line. What you can really get to learn about markets right now, too, and this is with fast markets is easier to learn, is that fast markets themselves, they love hitting numbers very quickly, so you see a lot of action. Bottom line, pay attention to the numbers and where the volume is, because the volume is where this market's going. That's what it comes down to. Does it take a while to get there sometimes? Yes, it does. These lows that were established in the January time frame, the February time frame, the August time frame, they're important because that consolidation has been going on so long. You break that consolidation, see ya, don't want to be ya. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Have a great night. Have a safe night. Look forward to speaking right back here, 8 o'clock tomorrow morning. Don't forget, Andy's coming right up next, 5 o'clock.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.